What's going on, you guys? Handok Kim here. Today we're going to be looking at how to invest in real estate without any money. No money down real estate investing. Here we go. Now, I get so many people that are really interested in how to invest in real estate without any money down. I understand that coming up with a down payment is a big issue for a lot of people, and so I've come up with some of these ways. Now, these are still very much plausible ways to actually invest in real estate, whether it's residential or commercial. Really, the world's your oyster, but it will require a lot of patience, work, and a good knowledge of your local market as well. So be sure to take this video and make it your own. Develop a practice where you can actually turn this into reality if it will be possible to you. No money down investing is kind of the talk of the town at the moment. All over internet, all over the investment world, people want to engage with no money down. And the more you do your property deals, the more you get involved with the investing into properties, you will become better and better at doing these no money down deals. But hey, it has its ups and downs. So let's dig into it and find out what is actually involved. All right, so the first method of doing no money down real estate, it's called wholesaling. Now, it's also called contract flipping. It's also called contract assigning. So it's basically when you sign up a contract and you basically find another buyer during that settlement period. So usually when you're buying property, you'll sign up a contract that says, today I signed the contract, but we'll settle in, 3 months time, 4 months time, whatever that you set it up to be. And then during that time, you find an alternative buyer to actually come and acquire that property. Now, for you to do this, you need to find a property that is well under market value and that you can actually secure a buyer during that period in time. So how does it work? You first find a distressed seller, and hopefully the seller will accept an offer at a very low amount that you will be putting in. And you need to make sure that this contract that you're signing is an assignable contract. Not all jurisdictions of the world will automatically make a property sale contract an assignable contract. So you need to make sure that it is an assignable contract. And for you to actually assign the contract, you need to be across the procedure that is involved in assigning a property sale contract. Usually that happens by way of a deed of assignment, and there is some sort of paperwork that you need to get through. Make sure you're across that process as well. Now, after you've done that, you need to make sure that you find a buyer that is willing and able to pay a higher price for that. Ideally, you'll be contracting the initial contract with the seller at a price so below the market value that you can still sell this contract to another buyer slightly under the market value, and you can still make money out of the contract. Now, once you find a buyer, then you can then assign the contract to the buyer, and therefore you pocket the difference and make a profit on that property. So let me give you an example. Let's say there's a property and the value of that property is $100,000. Now, you with your magic negotiation skills is able to nail a deal and contract the property at $60,000 with the seller, and the seller will sign the assignable deal and basically make a contract that is allowed to be assigned. Let's say you found a new buyer and the new buyer pays $80,000 for the property, and then now you can transfer the contract to the buyer with a deed of assignment, therefore pocketing the difference, which in this case will be $20,000 profit. Now, this way of no money down investing is basically what most people refer to. All the gurus out there that are trying to teach how to do it, get a paid course, but the magic recipe isn't particularly complex. All you got to do is find a distressed sale where the seller is pretty desperate to sell the property to you. Nail in a contract that even if you were to end up with a deal yourself, that you will become the owner of the property, that you will not be so shortchanged. Some of the good ways to look into these opportunities is looking up keywords like mortgagee when you're looking up properties for sale on the internet, and that way you can buy into mortgage in possession sales. Another keyword that you might be looking into searching for would be something like deceased estate. So I just type in deceased in the keyword, and then that will pick up all the listings that will mention deceased estate, or the properties that mention these keywords in their listing, in their description, are pretty damn desperate to get their property sold. So that is a good place to start getting a good deal. A couple of my properties that I was able to buy at a really good price were bought because of these tactics in searching for the right deal. Again, this method here will involve quite a lot of work. It's not easy to do. I often feel the amount of work that you need to put into getting these deals done is actually more than just saving up and waiting for the right deal. But let's move on to the second way that you can do no money down investing. Now, before I get into the next method to actually do money down real estate investing, please, if you find this information valuable, please smash the like button below so that my video can be more visible and become more favorable to the YouTube algorithm. Please go and smash that like button. give it a big thumbs up. Now, the second way to do no money down investing is a little bit interesting. It's called seller financing or vendor financing. And for you to do this, you need to find a seller that's willing to basically loan you the property at a fixed percentage income per year. So in this situation, the seller will become the bank, and basically you'll be paying an interest to the seller. More often than not, you can negotiate a deal with these type of arrangements without having to put any down payment, and it'll be just a full debt position that you'll be taking on a particular property. Now, when you do this, please watch out for the income that the property generates. Make sure that that is nice and solid. But the catch-22 situation comes around when the income on the property is nice and solid. Why would the vendor be selling? But do test out your negotiation skills, because if there is a way that you can own this property without putting any money down, and the seller is willing to actually do the deal with you from a seller's financing point of view, then why wouldn't you go ahead with the deal? But the thing is, you need to be very careful, because if you foreclose on your loan, the seller might reserve the right to actually take the property back from you. So make sure that you have a rainy day fund that is set aside so that you can get into deals of this nature, or you're able to add some more value, especially for commercial properties, to actually improve the cash flow. That way you would have no issues paying the vendor back with the steady cash flow that you're bringing in. So that will do away with the catch-22 situation that I mentioned to you before as well. So the benefit to the seller is that they will make a high return without having to manage the property or think too much about the property, and it's a pretty automatic return that they will get. The owner is no longer responsible for any repairs, and the new owner, which will be yourself, will be responsible for all the repairs and maintenance. But the vendor, the seller, will hold on to the property as collateral. Now, for you to do this though, you need to make sure that you have a good enough relationship with the seller to be able to establish this kind of arrangement. The seller needs to understand your financial position so as to believe that you are able to deliver on your promise to seek such vendor financing as well. So this is another opportunity that is possible, but will require a fair bit of work on your part to actually let the stars align to identify the right opportunity between yourself and the seller. Now, with the seller financing option, you also might be required to put some down payment to reduce the risk of the seller as well. So make sure you play these elements in a legal arrangement with the seller to actually sweeten the deal so that you can acquire the property. But by doing that, you actually do need money down, which in this case is not the title of the video. But at the end of the day, you can still secure a deal, and at least you don't have to face the banks where they will look at your credit score or your serviceability on a particular loan. Now, the third way to do no money down investing is to find a partner or someone who will be able to put the cash down for you. Now, the best way to find arrangement is to find somebody with the cash who is looking for the right opportunities, because a lot of these methods of no money down investing is quite labor intensive and is quite local market knowledge dependent. You're going to have a lot of people that say, you know what, I don't have the time, I don't have the options to actually invest this money, but I would love to put this money somewhere to do with real estate. And that's where you can come in to actually assist their money to be parked in a good investment. And once you identify the right investment, then finding a joint venture or a partner, a financial partner, wouldn't be so hard. The arrangement in this would be that you will own a portion of the property, and then the person that's coming with the money will own a portion of the property as well. But your portion that you own will be debt financed in its entirety, and your partner's portion, who comes with a bit of cash, can be a full equity position, or it can be an equity plus a little bit of debt position as well. So let's say there was a property where you're going to borrow 60% and you need 40% down payment. Find a partner that's able to put down that 40% in equity, and then you can give your partner 50% and you can give yourself 50%, but you will pay the debt and the repayments that will be liable out of that. Now, for you to be able to do this, ideally the property that you acquire will have some sort of cash flow so that can service your liability as well. Obviously, the person that came in with the cash will pay less repayments, and most of their position would be on equity. Now, doing this will still come with a bit of a risk, and you must know what you're doing before you actually get into an arrangement like this. You need to have a good and a rational relationship with the investor, and you need to present the right case before the investor so that they will be willing to put this money down for a reasonable capital gain. And I genuinely see something like this happening where there is a more creative deal happening, where you add value to the property that you're working on. If it's residential, some type of development or subdivision, and if it's commercial, then some type of exercise that will increase increase the income to actually quantify the capital increase on the commercial property that you might be considering to acquire. Now, I have seen a lot of these deals happen with friends or family members that you can be part of. It can be a really good way for you to get started as long as you've got a clear-cut objective and you're able to conduct the deal as professionally as possible despite the relationship. Make sure you write everything down. Make sure you have all the arrangements black and white so that no disputes arise at the end of the day. But you will come to those situations where that might be a case. So make sure you set out your objectives nice and early before you get into the deal so that there isn't much room for dispute or debate. This is where a commercial property is much better because the objective of a commercial property is a lot more simple than any other properties that you might be looking at. Commercial properties, all you're doing is increasing the income by adding value to the property, by finding better tenants, accommodating better tenants with better lease terms. And once that's done, you can choose to sell the property or you can choose to refinance the property as well. Based on what you're doing there, you may also have the option to buy out your investor that came in the first place if they wish to sell. Out of all the property deals that you can do with an investor and you can joint venture with other property, commercial properties actually leave a lot less room for dispute and arguments, which is a benefit for you. But when you look into these things, make sure you know what you're doing and that you actually put the due diligence behind it, and that the investor that you're bringing on board rationally understands the reason and the justification and the mathematics behind why you are investing into this particular deal. Now let's have a look at the last option to do no money down real estate investing. Now at this point in video, if you have not smashed the like button, please go and do that right now. That'll be a fantastic way for you to support what I do so that I can continue to make these absolute value bombs so that you can become wealthier by investing into real estate. Help a brother out. Let's get that like button smashed. Now that you've kindly done that, let's get on to the last option for no money down real estate investing, and that is a lease option. So let me tell you how a lease option works. Let's say there was a property that was worth $100,000 and the rent that you got to pay on it, let's say, was $1,000 a month, and that was the market value of the rental. Now what you can do is then you can lease that property out by paying a little bit more than that. So you pay $1,200 a month for the rent. Now you might think I'm crazy for paying more than the market value, but there is an upside for you, because along with that you're gonna secure yourself with the right to buy the property, let's say at $110,000 within 24 months time, and that's an option that you can choose to exercise. Now just in case some of you thought I was crazy for paying extra money for the rent above the market value, what actually happens with that extra amount is that it gets credited towards the purchase price that you have under the option contract, which in this case is called a strike price for some of you finance nuts out there. So after 24 months, you'll be applying $4,800 into the actual purchase price. Therefore, the final price that you'll be acquiring the property for will be $105,200. Now, this system works really well in a bullish real estate market. So let's say after 2 years, the property value actually went up to $130,000. Then you actually pocket the difference between $110,000, which is your strike price of your option contract, and then the $130,000 you're able to then on-sell the property on the market, in which case you'll be pocketing $20,000 in profit. Now at that point in time, the owner might actually come back and renegotiate with you to buy you out of that option by offering you some of money as well. It is also worth noting that in order to get into this arrangement, you might need to part away with some cash at the very beginning by giving them 1 to 5% of the purchase price in cash, and that is something that you do not get a refund. So not all sellers will be open to doing this without that little bit of cash at the beginning. Now from the other side, if you're a seller to actually get into a lease option, it can actually be quite lucrative for you as well. We don't know what's going to happen in the future, but you are locking in a value and a buyer at the same time, which means that you actually forego a lot of the costs like maintenance, because under the lease option deal, the person actually who will be buying the property, the tenant if you like, will be taking care of the property for any maintenance, because it's going to become theirs. They're going to be looking after the property in every way possible, paying all the maintenance and also paying all the council rates and other rates and taxes associated with the property as well. I know that this arrangement here unfortunately is illegal in some jurisdictions, but where they are legal, these are very realizable ways that you can actually acquire property without any money down, but there are risks associated with it. So do tread carefully when you're exploring lease option deals, and be sure to check out all the paperwork is in order before you actually enter into this deal. Now, all of these are really great ways to acquire property, but the traditional way of acquiring property with a traditional down payment and serviceability that could service a property is actually not bad to acquire property as well. So whilst these ways are possible. These require a lot of patience. These all require a lot of work and connections and a lot of knowledge of the local area. Like I said, please do not take what I say in this video as advice, but as what I know is happening in this marketplace at the moment. So my suggestion is, yes, do explore these options if it will line up and you can actually make things work and you have a lot of knowledge to back yourself up to do it. If not, being patient and waiting for the right deal and accumulating your cash by living frugally and actually working a little bit harder can actually be a good way to secure yourself a much headache-free investment as well. But always keep your eyes open, always venture out, always look for the right opportunities, and as long as you do that, you'll be building wealth with your real estate portfolio in no time. So if you found this video helpful, please like, subscribe, and click the notification bell so that you can see every time I post a video. Thank you so much for tuning in. My name is Handal Kim, and I'll see you next time.